Hello, everybody. Welcome. Today, I'm going to be going over my current position in TSLY, what exactly TSLY is, and the technical analysis for TSLY in terms of what to expect for price action and price appreciation or depreciation. If you like this video, please leave me a comment, subscribe, and a thumbs up, and hit that bell notification if you want to get more videos like this. Quick disclaimer, I am not a financial advisor. This is not financial advice. It's for education purposes only. So let's get into the content. As you can see on screen, this is my current position in TSLY. I currently have 375.6 shares, which if we do the math on this, let's see, 375 times the most recent distribution rate gives me a yield of about $400 a month of income. It is a pretty large position, and I have been adding considerably on the dip because for anybody that's been following the price of Tesla lately, you would know that Tesla just recently had kind of a bearish earnings call where they basically indirectly caused the price of Tesla to drop about 12%. So it's a great time to buy. Anyways, as you can see, my average cost is $7.19 per share. Current price is $16.96, so I'm down a little bit. As you can see, for my overall performance on TSLY, I am actually positive. I'm up about 18.5%. Some of that is market gains. I have actually been taking gains along the way as the price of TSLY has been moving up to capitalize on the opportunity for price appreciation. Now, let's go into TSLY. What is TSLY? So, the brief description that they give up here is that the YieldMax Tesla Option Income Strategy ETF is an actively managed fund that seeks to generate monthly income, passive income basically, by selling, writing call options on Tesla. TSLY pursues a strategy that aims to harvest compelling yields while retaining capped participation in the price gains of Tesla. So basically, more or less what this is a single stock covered call ETF, unlike say the QYLD or RYLD that tracks the S&P or the Russell. It tracks an entire index. This thing actually only tracks a single stock. So the current distribution rate is 75.1%. It's monthly. There is an SEC yield that's 3.5%, which I'm guessing adds to the overall net asset value of the fund, or the total amount that they have in market capitalization. This was actually a pretty cool feature that I found. I don't know if you guys have seen this before, but if you click on this little button that says click here under the 4 YieldMax ETFs distribution schedule, it opens up a separate page that actually shows all of the declaration, ex-dividend, record, and payment dates of future payouts for the entire calendar year for all the different YieldMax funds. So I was actually kind of wondering about this myself because I use the NASDAQ.com to look up the ex-dividend dates and payment dates for these funds, but I wasn't seeing anything beyond the most recent distribution, which was in July. So if you guys want to know about future distribution rates, here it is. Here's how to find it. So that way you can plan accordingly to whatever your needs are for whether you want to buy or sell TSLY or whatever you want to do with it. So there's that. If we go a little bit further down, you can see that basically the distribution is options income. All of the ETFs have a expense ratio of 0.99%, which, with a 70% distribution, that's really not that big of a deal. I'm not stressing it personally. And if you look at the net assets under management, it's at 306 million. When I first took a look at this thing, it was about, I would say somewhere in the ballpark of about 150 to 200 million. So there is growing interest in this fund, which is good. That's always a good sign that they have more money under management and not less. They give you the NAV price here, outstanding shares, which is a lot. Premium discount percentage. Basically, what premium discount percentage is if this is at a premium, it's above the current NAV price, and if it's at a discount, it's below the current NAV price. So premium means, for me personally, either hold or sell, and discount means buy, right? So there's all that. Here's all the other information that comes with it. And I just wanted to scroll down real quick. Here's the distribution rates. You notice that on they have the distribution rates here from January to July, but on the other little click here button that I showed you, it actually shows all of the X dates and dividend dates for the entire calendar year. So keep that in mind. That's good to know. This is particularly important. What I want to point out here is that, as you can see, they have 326 million under management, and most of that money is held in U.S. Treasuries, which U.S. Treasuries historically are considered to be especially safe, especially in times of uncertainty, like the Fed's been raising rates since March of last year. Usually when that happens, markets tend to fall off a cliff. Not always, but a lot of times, like last year, they fell off a cliff. So people will move their money from risk-on assets to risk-off assets, and the yields for treasury bonds will usually go up, which means they pay more for they pay more than they did during a bull market. We'll just put it like that. So as you can see, most of their money is held in these. These are generally considered to be safe. They have some cash and other things. I'm not sure exactly what this is for. Maybe this is for writing the options strategy that they use. But the most important thing I want to point out is look at how much money they have under net assets, and look at how much money they have under what they're using currently for their option strategy. It looks to me like they're only using maybe about 15-ish% of the overall capital that they have on hand to deploy these actual option strategies with the intent to make money and distribute money to shareholders, and collect their 0.99% expense ratios. So this is a quick rundown of what it is. I wanted to point this piece out here because a lot of times investors will look at the payout ratio for what a particular fund has. If it's over 100%, it's kind of perhaps a little bit unsafe. And if it's down in like 20, 30, 40, 50%, 60%, a lot of investors consider that to be safe. So it looks like they're only utilizing about 15-ish% of their actual capital on hand, which for me personally, I consider that to be safe. Again, not financial advice, but this is what TSLY is. This is what they do. And this is all the different features of what the fund is. There are other funds out there. There's one for NVIDIA, ORC, Apple, which I do actually also own NVIDIA and Apply, and there's one that came out for AMZ. But I'll talk about AMZ in a later video. I'm not actually going to pick any up right now because it was just released. So moving on to the charts for TSLY. As you can see here, TSLY, I have the daily chart pulled up. What I actually want to look at is the 4-hour chart. That's usually what I go on to determine support and resistance levels. I know a big concern for people is, with TSLY being such a high distribution rate, is it possible that this fund's safe and that it could actually appreciate over time? Well, we're going to take a look at that today. So as you can see from the most recent low on April 26th of this year, the price of TSLY was at about $12.50 a share. And at the most recent high, it was at about $18.43 a share, which was about, looks like about 3 months later. So the price of TSLY did actually appreciate from the low to the high about 47%. So now I want to roll on over to Tesla so we can take a look at Tesla and compare the two charts to see if there's any consistency here. So on Tesla, um, as you can see to the day on April 26th and all the way to the peak, which was roughly about the same amount of days later, Tesla had about a 95%, or Tesla, I'm sorry, Tesla had about a 95% rate of return during those 3 months. So what Tesla appears to do is when they say capped upside participation, it looks like Tesla captures about roughly half of Tesla's overall move. So is there price appreciation? Can it go up in value? Absolutely. Um, Now let's take a look at the downside on this thing. So I'm going to go back to Tesla, scroll over to TSLY, and we'll take the most recent peak, which it looks like it had a double top here and then sold off into the earnings call. So the top to the bottom was about a 12% drop, and it took place over about 5 days. So it went from a high of 1848 down to a low of about 1630. That would have been a great time to buy. I actually did pick some up. The date here is July 19th. So we're going to look at that. Okay, so wow, that's weird. I have exactly July 19th. Hold on a second, this thing's acting weird. So July 19th, as you can see, Tesla dropped about 15%. So Tesla actually dropped less to the downside than Tesla did. That's an interesting note to make because I would think that as a covered call ETF, this would potentially drop more, but it appears that there is downside protection and upside appreciation on this thing. And I am not just saying that because Tesla dropped more than Tesla after the most recent earnings call. I'm also saying that because we're going to end up getting a 70% dividend yield as well. So if this thing drops 12% on Tesla and 15% on Tesla, well, if I'm getting a 70% rate of return, then technically I'm not really losing anything. So anyways, hope you guys liked this video. Please comment, like, and subscribe. Leave a comment down below, and I'll see y'all later. Peace.